rout in cryptocurrencies rolled on, sending Bitcoin to its lowest level since October, as worries over tighter regulation by US authorities and central banks elsewhere gave traders fresh reasons to exit after a brutal start to 2018. The sell-off has now knocked about $500 billion from digital coins since early January. That's shaken a nascent market whose core attraction, anonymity and decentralization, is being challenged as never before by regulators. The latest broadside came from Europe, where Bank for International Settlements General Manager Agustin Carstens said, "There's a strong case for authorities to rein in digital currencies and that central banks, along with finance ministries, tax officers and financial market regulators, should police the digital frontier." Novel technology is not the same as better technology or better economics, Carstens said in a speech in Frankfurt. He said Bitcoin may have been intended as an alternative payment system with no government involvement, yet it has become a combination of a bubble, a Ponzi scheme and an environmental disaster, in reference to its electricity use. The biggest virtual currency sank 2.4% to $6,933 at 8:16 a.m. in New York, rebounding from as low as $5,922. According to Bloomberg Composite Pricing. Alternative coins Ripple, Ether and Litecoin also fell at least 3.5%. Crypto is being driven by daily negative news, said Craig Earlham, a senior market analyst in London at online trading firm Oanda Corporation. There's regulation speculation in India, South Korea, and the US. And then there's hacking, the Facebook situation, and finally the Tether story has people worried as well. The slump in cryptocurrencies got fresh momentum after a Bloomberg News report that the top US market watchdogs plan to ask Congress to consider national oversight for digital currency trading platforms, many of which have been operating in a regulatory gray zone. Chiefs of the Commodity Futures Trading Commission and Securities and Exchange Commission will appear together at a Senate Banking Committee hearing to discuss cryptocurrencies on Tuesday. The market is feeling regulatory pressure, said Zhu Shuoji, a founding partner at FBG Capital, a Singapore-based cryptocurrency investment company. $500 billion loss. Cryptocurrencies tracked by CoinMarketCap have lost more than $500 billion of market value since early January as governments clamped down, credit card issuers halted purchases and investors grew increasingly concerned that last year's meteoric rise in digital assets was unjustified. This week's sell-off has coincided with a rout in global equities, with markets in Asia extending losses on Tuesday following a white-knuckle day for US stocks. Some technical indicators suggest the rout in Bitcoin has further to go. The cryptocurrency's moving average convergence divergence indicator, the most profitable of 22 trading signals tracked by Bloomberg over the past year, flagged further downside after turning bearish in December. Bitcoin also dipped below its 200-day moving average for the first time in more than 2 years on Tuesday. The last time that happened, in August 2015, the cryptocurrency sank as much as 24% over the following 2 weeks. We're possibly heading back to where the true value of what Bitcoin should be, Oanda Earlham said.